Hey guys, so today we're looking at gold 5-minute chart and we're gonna see how GainzAlgo Pro has performed on this specific chart. So I just want to address one thing before we start. Some people think that these signals here are fake, like they think that they're photoshopped and something like that. So I just want to prove that this is real, right? This is no Photoshop. So I can just go on GainzAlgo Pro here, I can hide the indicator, and as you can see, all the signals disappeared. And if I turn it back on, there they are, right? So this is not Photoshop, this is real TradingView, and these signals are generated by GainzAlgo Pro. Anyways, so here we have our first trade. As you can see, it would have been a short. So we got a signal here, as you can see, right? And then we want to enter actually on the next candle, right? Because when we get this signal, right, we want to make sure that that candle closes so the signal would become confirmed, right? So this candle closes, then we had the following one, and we enter right at the bottom there, right? And then we close the trade after on the next candle after the buy signal is printed, right? So right here about there, yeah. So as you can see, that's a profitable trade. Good start. Let's get rid of that now. Then as you can see, the next trade was way bigger, right? We had this massive pump here. So once again, right, we enter essentially, let me hide that again. We enter, right, we get the buy signal here, then we enter basically right where we exited this trade, right, the previous one. So we enter here, we close here, boom, another trade way bigger than the last one. Then once again, another short. As you can see, this one is way bigger than that first one. Boom, easily profitable trade. Then we have another buy signal here. Boom, easy, right? I mean, back to back. So far we had 4 back-to-back profitable trades. Now, as you can see, this one is a very, very small trade. Now, on paper, right, it is profitable, right? We shorted, as you can see, the market did go down. But in this case, there is a chance that you actually could have maybe lost some money because of commission, right? So, you know, this one with this trade, it's kind of hard to say. I mean, it could have been a break-even trade, maybe a tiny profit, maybe a tiny loss, right? Depends on you know, many factors. But you know, in terms of GainzAlgo's, you know, signals here, you know, on paper this would have been a profitable trade. And as you can see, if we would have bought here, this was a massive trade. As you can see, absolutely massive. So if we would have entered, right, essentially, let me just mark it out properly. So we would have entered on the following candle there and then exited right here. As you can see, a massive trade. But now some of you might say, but you know, wouldn't this trade have hit our stop loss? Because if we would have oh, I misclicked. If we would have entered here, right, and then we have this big sudden drop, right, wouldn't that have hit our stop loss? Well, let me tell you why that would have not happened. Because if we just hide the signals for a second, right, so the signal was printed right here, right? Let's remember this candle right here. As you can see, we previously had our support, this little support area, right? So if I'm just gonna draw right now 2 lines, right? We had a little support area here, then it got broken, and then we established essentially a lower low, right? But the market jumped back, jumped back up. So it broke this first support level, and then yeah, it jumped back up. So basically, this was like a small little, you know, liquidity grab, a fake out. Call it what you want, essentially. But anyways, so as you can see, when we had this big drop, right, it entered our support area here, right, between these 2 lines, right? So let's just call it a support band, right? It entered the support band, and then what happened? It bounced right out of it, right? So this was, even though yes, this was a big and sudden drop, but if you would have had, you know, this one support area, you know, drawn out, there would have been nothing to worry about, right? Now, had this price drop broken out of this area, then perhaps, you know, we would be talking, you know, about possibly a stop loss hit. But in this case, it would have not been hit, right? So if we just turn on the signals, so once again, as you can see, we got the buy signal here, then the market went up a little, went down, right? And then we had this big drop, but then, you know, once again, nothing bad happened really. We just entered the support area, and then out of there, we went straight up, right? So this would have been by far the biggest trade. And then if we just get rid of this, right, let's get rid of these 2 lines as well. And then as you can see, to finish it off, so as you can see, then the market became actually very volatile here, right? So we would have then entered right here. And then as you can see, the market went up by a lot actually on this next following candle. But it then dropped by, let's see, oh, look at that, 0.4%, right? So if we leverage, this would have been a really nice trade. Now let me just hide this line here. So now let's analyze this whole mess, because you might say, oh well, if the market was so volatile here, my stop loss would have definitely been hit, right? So let's just mark, let me just get a line here. Let's mark our entry, right, in this big cluster of candles. So we would have gone the sell signal on this candle, and then on the next one, so right here, this is where we would have entered our short position. Let me just make the line a bit bigger, right? Let's turn it to 4 pixels, and then let's hide the signals, right? So as you can see, when the market here rallied up, right, it went up to this point, right? This was the peak, and then we entered here on this candle, right? We entered, and then as you can see, this same candle went up to this point, right? So this was a 0.17, as you can see there it says 0.17%, right? But as you can see, our previous high here is higher than that, right? So when placing your stop loss, you should really let me actually, where's that one little, yep, there you go. When placing your stop loss, right, so this is our entry, you should really place it above the previous high, right? Because because think of it, right? If you're shorting, the only case where you want to leave the trade is when the trend is actually, and when the trend continues going up, right? Now, an uptrend by the definition is higher highs, higher lows, right? So unless we make a higher high, we really don't want to exit this position, right? Just because the market is a little volatile doesn't mean that that it's still not going to drop, right? So unless it makes a higher high, we're not looking to leave, to bail out of this position, right? So we can set our stop loss just over the previous high, just in case if the market decides to do a double top, right? If there's like a little volatility spike, we don't want to get immediately liquidated, so we can just put it like just a bit over that previous high. And then our stop loss, well, ideally you would want to put it on around the previous low. So as you can see, we had a big uptrend here, but if we just sort of take some lines and try to mark this out, right? So here we had one low, then another low, right? So boom, boom. Let's keep marking it out. Okay, so as you can see, we had one low here, another low, the third one, and then I guess you could say, kind of just skipped over that, but we could say that this right here is our another low, right? We could mark it out this way. I'm pretty sure there's a way where you can like draw these lines much quicker than I am here, but I do not know that one shortcut. But anyways, let's not get let's stay on this whole subject. Anyways, so as you can see, our low here was right here, right? So this is where we could have set that take profit. So let me actually get rid of that line. Let's just drag this down. There you go, right? So our take profit would have been, as I said, on the previous low, right? Stop loss just over the previous high, just so if the market decides to double top, we don't get accidentally liquidated when we don't mean to, right? So just in case the market decides to keep uptrending, right, if it makes a higher high, okay, we're out at that position. But if it doesn't, we want to definitely stay and wait for it to drop as it did here. So now if I turn on the signals, as you can see, once again, we would have, just to recap, right, we would have gotten a sell signal on this candle, right? We waited for it to close. We enter right here where the little white line is, right? Then the market would have started going crazy, but our stop loss would have already been set here, right? Because of this, let's hide the signals once again, because of this previous high, right? So we're already set and locked in, right? Then and the take profit would have also been set because of this previous low, right? The market goes crazy for a little bit, and then it falls, and boom, a profitable trade, right? As you can see, this little gray line is pointing to the take profit. So there you go, ladies and gents. This is how GainzAlgo performs on gold 5-minute chart, right? And I'm using GainzAlgo Pro, and these are the settings that I'm using. So candle stability index, I have it on 0.5, that is the default setting. RSI index is on 80, that is not default. I believe the default is 50, but yeah, I have it on 80 here. And then candle delta length is set to 3, and then I also have disable repeating signals checked on. This is a very important setting. Basically what it does, we actually also have all these tooltips here next to each setting. You can pause if you want to read them, but yeah, if you get GainzAlgo Pro, you will have all these settings as well, with these tooltips that will explain every single setting. But anyways, disable repeating signal setting, setting. This specific setting, I love it. I always have it on. Basically what it does, it ensures that after every single sell signal there's going to be a buy signal, and after every buy signal there's going to be a sell signal. Because if you don't have it enabled, there might be multiple buy signals or multiple sell signals in a row. Now that can be in certain situations a good thing. Like for example, if you want to get multiple entries, right? Let's say you do an initial buy here, and if the market keeps dipping, you might want to keep buying up more of whichever asset you're trading, just to get a lower average entry. So you can do that, right? You can trade in various different ways with GainzAlgo Pro, but the easiest way is really to just have one sell signal, one buy signal, one sell signal, one buy signal, just because it's easier. It's easier to understand, and especially if you're just kind of getting into trading, if you're somewhat of a beginner, right, it's going to be much easier for you. So there you go. I hope this cleared up some questions, concerns that you had regarding where to put your stop loss, take profit, how GainzAlgo performs on gold, because I know a lot of you guys do trade gold. It's one of the more popular things to trade. Anyways, and one last thing I want to mention is that our 80% off, we currently have actually 80% off for GainzAlgo. It's going to be ending very, very soon, and if you want to get it, if you want to get GainzAlgo Pro, you still can with the 80% off discount. So I'm going to leave GainzAlgo in the link for it in the description. So the discount, by the way, is applied automatically. There's no discount code that you have to enter. You can just go get GainzAlgo, and that's it. You don't have to look for any discounts, nothing like that. It's applied there automatically. And if you have any other questions, suggestions, any kind of concerns, make sure to leave those in the comments, and I'll either try to answer them myself, or I will make new videos addressing it if it's a bit more complicated. Anyway, so thank you for watching, and I will see you in the next one.